Imagine this. Someone opens their phone late at night, scrolls through TikTok, sees people flexing profits, turned $100 into $5,000. Crypto changed my life. This coin will make you rich. Their heart starts racing. A voice in their head says, if they can do it, why can't I? The next day, they download an exchange app, deposit money, buy a coin that's going viral. And at that moment, their journey begins. A few weeks later, the chart turns red. Red again. Lost notifications, panic kicks in, hands shaking. They sell at a loss. Without realizing it, they just became part of a statistic. 90% of people lose money in crypto. But why? Is crypto a scam? Is this market only for insiders? Or is the real problem the way most people play the game? In this video, we'll break down the real reasons why the majority fail in crypto and how you can avoid becoming one of them. 1. Entering with emotion, not understanding. Most people don't enter crypto because they understand it. They enter because of fear of missing out, envy when others profit, viral content, market hype. This is called FOMO, fear of missing out. The problem is, the market doesn't care about your feelings. When you feel late, it often means you're buying the top. The price has already gone up hundreds of %. Early buyers are preparing to sell, but you arrive with hope. Then what happens? The market reverses, prices fall, and you're trapped at the top. Not because you're stupid, but because you entered when everyone was already euphoric. Markets always move against the emotions of the majority. When everyone is scared, it's often opportunity. When everyone is greedy, it's often danger. But 90% of people always follow the crowd, and the crowd almost always arrives too late. 2. Treating crypto like a casino. Many people don't come as investors, they come as gamblers. They think, I just need one big win. If I'm lucky, my life changes. All in once, and I'm done. They put in savings, rent money, even borrowed money with no plan, no stop loss, no mental preparation. When the market goes up, they get greedy. When it goes down, they panic. But crypto is extremely volatile. A 50% rise in a week is normal. A 40% drop in a day is possible. For a gambler, this feels like emotional torture. For a real investor, it's just part of the long-term game. Most people don't lose because they're dumb. They lose because they're not mentally prepared. Crypto isn't just about numbers. It's about controlling yourself when everyone else is losing their mind. 3. Having no strategy. Ask someone who lost money, why did you buy this coin? Common answers, people said it's good. A friend told me. It was trending in a group. An influencer recommended it. They don't know when to buy, when to sell, how much they're willing to lose, what their goal is. They only react. Price goes up implies buy. Price goes down implies panic. Price drops more implies sell at a loss. Price rises again implies regret. That's not investing. That's emotional reaction. People who survive are different. They have a clear reason for buying realistic targets, defined risk, a long-term plan. They don't depend on hype. They understand. Without a strategy, you're not a player. You're just part of the game. 4. Trapped by the get-rich-quick illusion. Crypto is often sold as a shortcut to financial freedom. And that's the biggest trap. Most people don't want to learn blockchain basics, understand market cycles, accept risk. They just want results. They want wealth in 3 months, a life change overnight, to jump from nothing to everything. But the market doesn't reward impatience. Crypto works like this. Money flows from the impatient to the patient, from the emotional to the disciplined, from those who rush to those who can wait. Most people lose not because they chose the wrong coin, but because they couldn't wait. 5. Becoming exit liquidity. In crypto, there's a brutal term, exit liquidity. It means you buy so someone else can sell. It usually happens like this. A coin starts rising. Early buyers enter. Price explodes. Then content appears. This coin is going to the moon. Don't miss this. This is the future. You see it, you buy. And right then, early investors start selling. The price stops rising. Then it falls. You're left holding a coin bought at the top. You're not an investor. You're the exit door for someone smarter and earlier. That's the fate of most people in crypto, escaping the 90%. So why do 90% of people lose in crypto? Because they enter with FOMO, trade with emotions, have no strategy, chase quick riches, refuse to learn, aren't mentally prepared. Crypto isn't about luck. It's about education, discipline, patience, self-control. If you want to be in the 10% who survive, change your mindset. Stop asking, what coin will make me rich? Start asking, what do I need to understand so I don't become a victim of the market? Because in crypto, your greatest enemy isn't the market. It isn't whales. It isn't influencers. It's your own decisions when emotion takes control. And only those who can defeat themselves will survive in this game.